Hey, Curtis here, your money for life guide and cash flow specialist. Today, I'm going to talk about one of my favorite topics, short talk today. And if you're listening to this on the podcast, you might want to go back to YouTube and watch because I'm going to show some screen share with some of this stuff. But we're going to talk about cash flow. I hear a lot of talk about wealth building and legacy planning and multi-generational wealth, but I think you have to start with the basics, and as I'm recording this, the football draft is and I'm watching the NBA playoffs, but playing as a ball player in high school and college, you have to master the basics. You got to master the pick and roll. You got to master blocking and tackling. And I find a lot of people want to skip that. Well, what are the basics? The basics are you have to understanding that it's from the richest man in Babylon. Part of all you earn is yours to keep. Okay. And you have to spend less than you make. And then now you save, you have to capitalize, and you use that money to buy assets. Income follows assets. If you want cash flow from real estate, you have to have a house, right? Or an apartment building that somebody pays you to live in. That's where the cash flow come in. Or I've got clients in a car rental business. The asset is the car, and people are paying them to, use their car, right? So you've got to have the asset. If you're in business, even if you're business, the business is an asset. And then do you have marketing assets? All right. So I was just watching this video from Daniel Priestley. So I that's on my mind. I'm going to do another one with my interpretation on that for you business owners. But today we want to talk about cash flow, because what happens is when this is going to be an article that's going to come out on our blog. But when it comes to building wealth and making smart investments, many people find themselves, they're navigating without a roadmap. They have no doctrine, financial doctrine, I like to call it. When it comes to their money, they're just, I heard this sounds good. And so my doctrine around investing, and I don't even think investing is like the first thing you should do. I was just looking at an email I got from a client. They were like, well, should I save? No, they didn't say that. They said, should I invest or should I pay off debt? The answer is neither. You need to save first. Now, if debt is a problem, we have a debt elimination process that we teach, but you got to pay yourself first. And we'll show you how to recapture your debt in a way that you get out of debt. We call it debt free for life. And then you're out of debt and you still have the money. So it always starts with the saving, and then you can invest, but investing is last, right? It's really save, protect, invest. Okay. And that's the order, and that's the philosophy that we teach it. What I'm going to go in on today a little bit is because what happens is most people don't have a roadmap. It's just, they just move money into an investment account sporadically. I think they also put money into their IRAs and 401ks too soon without having any liquidity. And if they do it, it's based on gut feelings, generic, like dollar cost averaging, and then, discussed, portfolio rebalancing discussed at an annual meeting with your financial advisor. Okay. But let's be real. How long ago was that? Okay. And so the lack of, most people don't have an integrated strategy. That's what we kind of teach. So the lack of a cohesive strategy stems from a dearth of metrics without a way to track what's being allocated, saving, spending, investing. It's hard to make an informed choice because you don't know what's going on, right? So the first step is you need to know what's going on in your personal economy. So enter, a friend of mine calls the reservoir method. I like to call it creating a wealth coordination account. So I'm really going to go in on this concept of a wealth coordination account and creating a reservoir where all your money goes first. And what I want to teach you guys to do over the next few weeks is to make savings automatic, unconscious, actually. And it's the first thing you do. And I'm going to share screen here in a little bit so you can see it. And I want to make spending conscious, right? Because right now, spending is unconscious and savings is what you do, what's left over, right? If you have anything left over. And so that's why people have a problem saving, and it's not by mistake. We're trained to think that way. Okay. What you want to be able to do is you want to establish what, and I'm going to show you in a slide, Whereas there's savings, you have fixed bills that are predictable in both timing and amount, and you have variable bills. So what you got to do is you got to get a handle on what your life costs, right? And you want to have a target for savings. You want to have, we're trying to create free cash flow. And, if you can do that, decisions become more precise, right? And then now what if, because I'm just kind of telling you our model with our clients is, what if you had a quarterly calibration with your advisor where adjustments can be made swiftly to accommodate changes in goals and circumstance? So for instance, if your goal is to build 3 to 6 months of I like income or expenses, right? uh Liquid, so if stuff happens, because stuff is going to happen, right? So I think that people, whoa, something happened, I got laid off, I had an emergency, I had a, yes, that's life. Okay, and so you got to have a plan. Most good planning is more provisioning and kind of protecting yourself. How do you win when stuff don't go right? That's a good plan. I don't care about a Monte Carlo if everything goes right and the market goes up. Markets don't go up all the time. They go up, they go down, they go sideways. So, and so what you want to do is, I want you to have a forward-looking view, and you want to tell your money where to go instead of asking where it went. So let me kind of illustrate that. Here we go. All right. So let's say, so here's the current problem with managing cash flow. So we call this tell your money where to go instead of asking where it went. Okay. And so what's going on here, see, most people are budgeting. You have all these budgeting tools. They're really just, and if I were to do it, I'll do another one on business, but even your P&L is a budgeting tool, and or at best what they're doing is looking at history. Here's what you did, right? And it's scarcity based. How much can you cut? I'm not trying to cut anything, right? And so the difference in budgeting is like driving a car looking through the rear view mirror. Okay. The mirror tells you where you've been, but looking out the windshield is telling you where you were going. Okay. So where are you going is where you want to go is hopefully it's financial freedom. What is that? Passive income greater than expenses. So you can live like you want to live from the income from your personally invested resources. And that just doesn't happen. You got to make stuff happen. I would argue that, typical financial advice is not designed for cash flow. It's designed for you to lock up money for 20, 30 years and hope you have enough money to live off of the resources and not die before the money runs out. Okay. And so what happens is this. So let's talk about money hitting the door, right? So here is where the game starts, right? You earn money, you get paid, but there's a circle of confusion, right? Where you've got you saving to spend, you've got long-term accounts, you've got net weekly income or monthly, you got fixed bills, variable spending, you got Venmo, you've got drafts and coming out your account. And so what happens is we commingle fixed and variable expenses. We have different frequencies of pay sometime, part-time, side hustles, and it's all mixed into what I call a spending account. Okay, because it's designed for you to spend money, right? And so we got to understand the difference between long-term and short-term savings. We live in a paperless society, right? So now you just throw on top of that direct deposit, credit cards, debit cards. How do you manage all this stuff? All right. And so too many options for paying your bills: auto pay, credit cards, Venmo, check writing, cash. Young people don't even know how to write checks anymore. All right. And let's put Apple Pay on here. I'm gonna update this slide. And so, plus if you get a tax refund, you're over withholding your taxes, right? Or you're under withholding your taxes. So there's just a lot of stuff going on, right? And so now to add to that, we are suffering from, so I like to call this financial gravity. Okay. So you've got your earned income, right? So let's say you have earned income is like W-2, right? So out of W-2 income, the first person that before you get to it, that gets to it is uh, the money gets taxed, right? So you earn it taxed, federal, Social Security, state and local taxes, union due, all that stuff is coming out before you see it. Then you've got your payroll deduction, right? Is coming out. So retirement contributions, health insurance, voluntary benefits, all that stuff. Now it hits your account. So now you've got fixed expenses, variable expenses, discretionary expenses, and maybe, just maybe, you can save a little bit. And for the average savings rate, like I like to see people save 15, 20%, but truth be told, people are either spending 105, 110 of their income, which is why out of these expenses, the fixed debt becomes the fixed expense and is eating up your lifestyle. And then, or, the average rate is less than 5% in the United States as I record this. Okay. And so you're going to make a lot of money, but it's not what you earn, is what you keep. So how do you fight this gravity? Okay. So you got to change how you apply money. So the solution is moving from the circle of confusion. Then, so the top account where it says net income, that's an account. So your reservoir, what we call your wealth coordination account. So all of my earned income goes in that I take from the business. I'll show you another one where the business comes in. That's separate. This is to run your household, right? What is coming in? Hopefully, if you don't manage your money together, then you each got to do this, right? Or maybe overlap on the fixed expenses. But what you want to do, right, is you want to have money coming in. Then you're going to allocate, and this is kind of what we help people do. Well, what are your fixed bills? I was just doing this, going over my bank statements. And I was writing, F for fixed, and I'm adding up my subscriptions, because you got to know what's going on. Some of this stuff you don't need. Do you need $250 on cable? I'm not trying to cut lifestyle, but if you're not saving, then, something's got to give, right? Because only two things you can do is make more or spend less, okay, or become more efficient, or find money, the third option, that you're losing unnecessarily, which are wealth transfers, which is what I specialize in, right? You've got variable bills, right? What is variable? Gas, grooming, eating out, shopping. Those are things that you do every month, but they may change from time to time. And then, out of this reservoir, you can send money to different long-term savings. So, guys, I'm known for teaching people how to become the bank using permanent insurance. Well, this is how I manage that. And then I send that money to an account, or it's coming from my wealth coordination account. And then we, have different places that we send our money, but it all ends up in our bank policies. We call it the private reserve, on our private reserve accounts. And then we use that to buy other assets that generate more cash flow coming into the house. And I'm going to show you the velocity method in a second. And then what we'll do is we'll analyze your cash flow, right? So it's like, this number is this minus this. And then I had a client I was just working with, and it was, okay, we got $2,200, but they only spent about $600 here. So they had unallocated cash flow of about $1,500. So now we can know what they had to save. But they had a lot of debt in here. So now I knew that I could save and show them a strategy to get out of debt. But you see how the first thing you got to do is know what's going on with your cash flow. So you're organized. So we have a program called our money organization plan. Why is that? So you can make better financial decisions and adjustments. Okay. And then, one of the things, so you see the financial gravity. And so if you have earnings, so the objective, guys, is basically to begin to use your savings as you coordinate and capture wealth. Let's go back. As you coordinate and capture wealth, what you want to do is you want to begin to build cash flow engines. You want to buy assets. So it's three types of income, right? Earned, passive, which is rental and business income, and portfolio, which is dividends, interest, and capital gains. But these are taxed at a more favorable rate. And so, you know, my daughter just filed her really first full year of working, and she owed some taxes. And she goes, Dad, I owe taxes. And she's like, well, yeah, well, welcome to my life. She got a refund, but she owed state because she's up in New York, and uh chose some state. So it says, well, well, wait, she's, trying to do things to grow her income. She says, well, if I make more, are they going to take more of my money? Yes. Okay. So I said, look, you got to go back. You have Rich Dad Poor Dad, because I'm making her read it, suggesting she read it. I won't say makes a strong word, but it's like, yes, what's the first lesson in Rich Dad Poor Dad, guys? Rich people don't work for money, right? What do? They work to take earned income to buy cash flow engines that throw off passive or portfolio income, so that they change the nature of their income so they can keep more of their money. Your number one wealth transfer is taxes. So all this starts with having a financial framework, a structure to manage cash flow, right? And then, and so it goes back to telling your money where to go. So, we call it wealth coordination, because once it hits that account, what I want to do is help you. Let's go back for a second, right? I want you to, say, I want to so we're going to put into a reservoir. This is why I say the reservoir. And then what we want to do is we're going to only take out what you need to run your household, only take out what you need, so the money is left here. And so the goal of the wealth coordination is to coordinate you buying cash flow engines so that you can make more money, right? And so you don't automatically lockstep increase your standard of living, right? And so that's structure. So if you'd like to have that kind of conversation, that's what we try to help people do. And then let me just give you, I could do a whole hour on this slide right here, but basically the concept of velocity over accumulation. So let me show you how we use the velocity of money in the wealth coordination in our practice. We teach people to work and earn, right? Then that money goes into your wealth coordination account. Okay. So all of it, right? And then what I didn't put in the animation is, some is going out for expenses, fixed and variable, but really the focus is moving it short. So now we use it to show people, okay, now out of that, how much are we going to contribute? Because I look at the permanent insurance as one of your cash flow engines, because you got to learn how to be the bank. Nelson Nash says everybody needs two businesses, the ones that gives them a paycheck and the banking business, right? So now this is your bank. Your bank, meaning your pool of capital that you control. Bank is a concept, right? And so now what are you going to do with that? So you could use it for major capital purchases and recapture that money. Or right now you could use it to buy or build assets. Like what? Residential real estate. Remember, money follows assets. Your own ideas, down payments for a business or franchise or business equipment, commercial real estate, and you take the profits off of that. You leave enough money in your accounts to run your business. You throw the profits back into your wealth coordination, and then you just watch, rinse, and repeat. See, it's velocity. Money like speed. So it's cash, asset, cash. Cash, asset, cash. What we're trained to do is tie money up in 401ks and 529 plans and hope the magic of compound interest. But if these things are in mutual funds, guess what? You ain't earning compound interest, because investments don't compound. They appreciate and they depreciate. They go up, they go down. So some of this, I like to help people understand the financial physics of what's going on. If you know what's going on, you'll know what to do. So, hey, if you like stuff like this, let me leave in comments. Let me know the type of things that you want to talk about. You can take the our financial freedom quiz if you just scan this barcode, and see where you stand, and let us know if you'd like to have a conversation, a complimentary consultation to see what's going on with your cash flow. or any, yeah, I'll give you 15, 20 minutes. You can talk about whatever you want to talk about. Okay. And if we'll put you on our mailing list, we're do every other week, we do lunch and learns. And, we just did one on debt free and truly wealthy. We just did another on intro to private family banking. And, we're going to do one, 401ks. Are you financing your retirement or the government's? So, uh, those are things that you can do, that you can learn. Folks, you want to read 8 to 10, 12 pages a day of good books on money, on success, on leadership. It is your money, not Kurz's money. I always tell people, and you've got to get better. Remember, your number one asset is you, right? It's not some fund manager you never met. So what do you want to invest in? You got to invest in your mindset. You got to invest in your skill set. Skills is what make money. And you got to invest in your network. Who do you know? And more importantly, who knows you? Have a great day, everybody. Hope that was helpful. Are you ready to take control of your financial future? Hi there. I'm Curtis May, and I'm here to help you achieve your financial goals. Do you want to be the customer bank, or would you like to be the bank? Subscribe to our channel for regular updates, valuable insights from experts in different fields. The name of the game, guys, is cash flow. Okay. You can't eat equity. And our goal is to help you build, we call it being a cash flownaire, which is passive income twice your expenses outside of Wall Street, where possible, right? Which is quite possible. And so if you're interested in learning more about our services, here is what I challenge you to do, or I invite you to do, I won't say challenge, is to take our financial freedom quiz. See where you are, okay? Don't wait any longer to take control of your financial future. Let's begin this journey together.